Let's start your investment journey.
Hi, and welcome to another edition of our weekly market outlook report for the week starting Monday, the 29th of November. We've left behind us a shorter but very volatile trading week. The week ahead could bring more volatility. The economic data releases start with Japanese unemployment rate and also retail trade data for September on Monday. On Tuesday, we should be on the lookout for Chinese manufacturing figures, Eurozone preliminary consumer price index figures for November, and Canadian GDP Q3 data, in addition to US consumer confidence for November. Going forward, Australian GDP Q3 figures, UK manufacturing PMIs, US ADP employment change, and manufacturing PMIs for November, in addition to the crude oil inventories, will be closely watched on Wednesday. On Thursday, Australian trade balance in addition to Eurozone unemployment rate for October and US jobless claims data. The week will finish on Friday with Eurozone retail sales data for October and probably the most anticipated data release for the forthcoming week, which is US non-farm payrolls figures, US unemployment rate, and average hourly earnings. Now, let's take a look at few markets. Let's start with the Bitcoin. Bitcoin is uptrending. However, this appears to be a corrective pullback. Key trading level going forward is at 54,125. As long as we see a rally from here and a breakout above 58,000, 58,400, possibly a retest of that level from above, that could open the way for the extension of this rally to the upside, initially targeting additional resistance on the upside at 62,200, 65,000, possibly even towards 68,500. Alternatively, if we see a corrective pullback and a loss, an end of day close below 52,000, retest of that level from underneath, that would change the structure of this market, potentially opening the way for a deeper corrective pullback, targeting additional support at 49,540, possibly even towards 45,000 even number. Now, this is German 40 or the DAX index, which had a corrective pullback, big reaction to the news about new COVID strain. A key trading level going forward is at 15,350, 15,400 area. It's a zone of about 50 points here because we have clusters of the previous lows and also 200 period moving average in daily time frame. Bears appear to be in complete control below that level, so rallying to that level and a rejection could bring more volatility and possibly open the way for the extension to the downside, targeting additional support at 14,800, possibly even 14,500, 14,480. Alternatively, if you see a rally and a breakout, an end of day close above 15,450, that could open the way for the oversold bounce back short squeeze, targeting additional resistance at 15,800. This is NASDAQ. NASDAQ also had a bearish and a corrective pullback to the downside. This appears to be a coiling price action, therefore an energy build-up towards this rising support trend line. Key trading level going forward is at 15,900 to the downside. If we see a rally, oversold rally from here and a breakout above 16,240, that could open the way for the extension of this rally to the upside, targeting additional resistances at 16,440, possibly even 16,780. Alternatively, if you see a push lower and an end of day close below 15,900, retest of that level from underneath, that could open the way for deeper corrective pullback towards 15,500, 15,360. Now let's talk about currencies. This is euro dollar. Euro dollar appears to be downtrending quite clearly, although we are seeing an oversold bounce back here. Key trading level going forward is at 1.12. These clusters of the lows. If we see a rally and a breakout above 1.1350, that could open the way for a gradual move higher and creation of short squeeze targeting 1.14, possibly even 1.14. 1470, one spot 1540. Continuation of this selling pressure would indicate a sell-off from here, loss and end of day close below the cluster of these lows at initially one spot 1250 and then one spot 12, which could then open the way for the continuation to the downside, targeting additional support at one spot 1120, one spot 11 to the downside. Sterling dollar is also downtrending, although we are seeing an attempt for an oversold bounce back towards this falling resistance trend line. Key trading level going forward is at one spot 33.80. A rally into that level and a rejection would be bearish, or a gradual move lower and the loss of these lows in the same way as euro dollar, loss of 133 could open the way for the continuation of this selling pressure, targeting additional support towards one spot 32.50, one spot 32 to the downside. Alternatively, if we see a rally and an end of day close above one spot 33.80, retest of that level from above could open the way for a short squeeze, targeting additional resistance at one spot 34.50, possibly even one spot 35. Dollar Japanese yen, corrective pullback lower, rising support trend line is lost, and also the cluster of these previous lows towards one spot 14. Key trading level going forward is at one spot 14. Actually it's a zone, one spot 14, one spot 14.20, the zone of about 23 points, 25 points here. So oversold rally into that level and the rejection would be bearish, or the loss of these lows and a gradual move lower would be bearish as well, targeting additional support at 112.80, 112.50, possibly even 112, 111.50 over a longer period of time. Alternatively, if we see oversold rally and a push higher and end of day close above 114.20, that could open the way for the push higher, targeting additional resistance at 115. Now let's talk about gold. Gold had a corrective pullback initially last week and then oversold bounce back on Friday, which was then sold into towards the end of the trading day, bringing the price towards this rising support trend line and the retest of 1785 level again. This level is hugely important because it's not just a cluster of the previous lows and the pivot and also the trend line, but we can also see that as a fib retracement of 61.8% as well, so the full fib retracement. So cluster of things pointing to how important this 1785 level is. Rally from here and the push higher above 1814 and end of day close above that level could open the way for a gradual move higher, targeting 1818, 1830, possibly even 1850. Alternatively, if you see a push lower and end of day close below 1780, retest of that level from underneath as a newly found resistance could negate it, possibly opening the way for a gradual move lower towards 1760 support, possibly even 1750. Lastly, let's talk about crude oil. Crude oil had a massive corrective pullback as well on Friday. A loss of rising support trend line and, more importantly, loss of 200-day moving average. The current price is below the key trading level or area between $71.80 and $72 per barrel. Rally from the oversold levels into that level and the rejection would be bearish, or a gradual move lower and the loss of these lows towards 67.20 could open the way for a gradual move lower, targeting additional support at 65, 61.80, possibly even 58.50 to the downside. Alternatively, if you see a rally and a push higher and a daily close above 72, retest of that level from above as a newly found support, that could open the way for a gradual move higher and retest of 75, 75.80. Thank you for watching, thank you for listening, stay safe and happy trading. Bye for now.